All right, guys, welcome. If you're hearing me clearly, type 7 in the chat. So once you hear me clearly, type 7 in the chat. All right, perfect. So I'm going to basically run you guys through how we're going to conduct this class. So you aren't allowed to unmute your microphone just randomly and speak. In order to be unmuted, you need to raise your hand. So if you have an issue, you just raise your hands and I will attend to you. So I hope you guys are having a good day or had a good day. And I hope you guys caught this trade as well. This trade was sent out in the group. As you can see, this is VIX 50. Alright, so we caught this clean sell on VIX 50 today. So I hope you guys actually benefited off of this trade. So I'm gonna basically run you guys through how we identify this trade and why we took this sell. So basically, as you guys know, the market trend is the first thing we need to identify. All right. And as I always say, if you have to look too hard to figure out if you're going to sell or buy, then do not trade. So looking at VIX 50, it is clear we have a downtrend. The market been pushing down for the past couple of days. After seeing that, this class is being recorded. After seeing this clear downtrend, we're only going to sell. So the first piece of the puzzle is already solved. We know say sell, we are going to sell the first thing. So when you go down on the lower time frame, you're not second guessing yourself and you're not jumping around to figure out what's happening. You know definitely say a sell, you are going to sell. Because remember, the market is full of information and it will basically convince you that what you're seeing is correct. So for instance, if you are looking for some type of breakout structure or some type of counter trend trade in this downtrend, the market will give you hints or give you clues. Say, yeah, man, I hope me I go. When really and truly the market is going down, So you have to basically know what to look for. When you know what to look for, it prevents you from taking a lot of losses that you're not supposed to take. So because you're looking for sells, everything else is noise, right? Everything else is noise. So after identifying the trend, we'll go down to the entry time frame, which is 10 minute, 5 minute, and rare cases, the 3 minute time frame. As a matter of fact, this entry right here, so was a 3 minute time frame entry. Right? Because after identifying the trend, we'll go down on the lower time frame, which is a 5 minute time frame right here. So I will identify the previous lower high point. Remember, when the market is pushing down, the market will push down, pull back, push down, pull back, push down, pull back, push down. So these points right here, so those are lower high points. These are lower high points right there. Lower high, lower high. Because remember, this is a high point, but it's a lower high point. So each time the market goes down, it creates a lower high point. And those lower high points, those are point A's. These are always point A. A, B, C. A, B, C. A, B, C. So looking at this was the previous lower high point right here. So, right? And then the market made the point B right here. So, hope you guys are follow. So after seeing that, we are now looking to see the market pull back to give us point C. And remember, the trick to the ABC pattern is not just the ABC and the surface. No. The main trick to this is A must be close to point C. Whenever you have point A and point C being this close, you have a powerful trade. That is the main criteria of ABC trading. When point A and point C is close or at the same level. So if you realize point A and point C basically I respect the same level of resistance in this area. Because this general area, so even though I draw one line, it's a general area. So instead of drawing a box like this on the market, I just draw one line and have it in mind, say it's a whole era and not just one price. The one line is always clearer and cleaner. That's why I use the one line. But resistance and support is a general area. So when the price came back to this level of resistance right here, so which is the point C, I was looking for an entry, which is, as you guys know, the bearish engulfing in this scenario. So if I'm buying, bullish engulfing. If I'm selling, bearish engulfing. So in this case, I did not see a bearish engulfing on the 5 minute time frame at this level. So what I did was I went down to the 3 minute time frame. So on the 3 minute time frame, you're seeing the same exact thing, the same ABC pattern. Only through you're seeing more candlestick. So remember, you know, the lower time frame is more candlesticks because it's a smaller time interval. Higher time frame, less candlesticks. So if let's say you take one 4 hour candlesticks from B to C, it might take a lot of 3 minute candlesticks to get from B to C. So when you really look at this now, I zoom in on the level. What is this? That's a very clean bearish engulfing. See that? Very clean bearish engulfing. So that was my entry confirmation. And then, even if you missed the first engulfing, there is another bearish engulfing again right here. So that then there was added confirmation. Right? So after seeing that, I entered my trade. After I entered the trade, I set my stop loss. So the first thing I did was I looked to my immediate left to identify which previous level is here where price can potentially come back and retest. So this would be the highest point. You see that? That's the highest point, the previous point A. So point A don't only aid in entry. Point A also aid in your stop loss placement. So if you realize I put my stop loss above the previous point A to give my trade breathing room. So if let's say the market want to do a deeper pullback, I am still safe. So a lot of persons get messed up because they're trying to use too tight of a stop loss. So whenever you're trading, always aim to have your stop loss either above the previous point A or it can be at the same level as it. Right? So after doing that, set stop loss right here. So I drag my TP down to a 1 to 2. Enter my trade, set and forget. That's all. So that basically sums up everything I did to achieve this trade on VIX 50. Very simple, guys. Very simple. Very, very simple. ABC. So if you have any questions, you just raise your hand now so I can answer the questions that you guys may have. So just raise your hand and I will unmute you. All right. So Johnny Williams. Go ahead, bro.
Alright, so if you don't see a beer engulfing confirmation, you will not take the trade, is what you're saying.
Precisely, because you will have a scenario where, yes, everything might line up like this, but what if the market did this and just shoot up? You understand? The engulfing confirms say there's a high chance the price go down than go up. Because remember, you know, they can still see the engulfing and price just shoot up to your stop loss. You can't tell if that will happen or not. You have to just work with the confirmation. But if I don't see the engulfing, I will not enter. Make sense? Follow, bro?
Yeah, so other than the bearish engulfing, you use any other confirmation?
No, just the bearish engulfing. So there are a lot of other candlestick patterns, a lot of other patterns there are. But I only focus on the engulfing because the engulfing is really and truly the most powerful one. The engulfing basically I tell you say buyers are chipping in or sellers are chipping in. Because remember, the engulfing is basically you have a bullish candlestick, then you have a bearish one, bam. That basically engulf it. Basically, it eat up the previous candlestick, bro. So this I tell you say the market a change direction and it have a higher chance of going down. Follow? Follow, bro?
Yeah, follow. Makes sense.
Yeah, man. So always wait for the engulfing before you enter. No engulfing, no entry. All right. Davis, go ahead.
So I've been I use the ABC formula,
Yeah,
Zine, and like more when me see you say me in some signals, Zine. So me I look for see exactly what you do for see. Me I do the same thing, right?
yeah.
And like sometime with the bearish engulfing, like me I look and me I say, oh you say you start to trade power engulfing and me I say the engulfing and I say the bigger like it eat up the green candles in,
Yeah.
but like completely cover it. And like sometimes that throw me off come here and say, how comes him get them trader and fee wanna play out, but when me see the proper engulfing now, it just shoot gone up.
Okay. All right, bro. So as I say, I look for the engulfing on 3 time frames. If you realize this is a 10-minute time frame as well, I realize at the same thing, and this time frame also give an engulfing. You see that? So you have to basically check the 3 time frame them for your entry. 3 minute, 5 minute, 10 minute. Those 3 time frames, I will give you the sweetest entries. So whenever you see the engulfing for either the 10 minute, 5 minute, or the 3 minute time frame, you're golden. You might see it on all three of them line up, bro, and that is the most powerful trade you can get using the ABC formula. When the 5 minute time frame get engulfing, a 3 minute time frame get engulfing, and a 10 minute time frame get engulfing. Trust me, because right now with this trade, a 10 minute time frame give the engulfing, and the 3 minute time frame also give the engulfing, bro. So you have to check the entry time frame them properly. Understand?
Yeah, yeah. And like, all right, for example, right now, me I look on the same thing, but I true me say I did start the class and me I wait on one trade on step 100 right now and it look like the ABC. Cause
Step.
if you say like me say use the second line, cause you say I always use two line and like you wait till it pass, you like if you take the entry then when it pass the first resisting level and then you get the bearish engulfing, right?
All right. So you know if you think so deep, bro. You see once the A, once point A, which is where the price is starting from right here. So once
Yeah.
point A, which is this, and point C, they close to each other. That is when you want to take your entry. So basically, if you realize there are not just one but three levels of resistance in this area, I'm not gonna draw all three, I just draw one. So this could have be one as
Yeah.
well. This could have been one right there. You see that right? That could have been one.
Oh,
And
but all right. Say
this
say they
as
put you
well
at
could
that the
have been
one
one.
there, but your stop loss would have be tight.
What this one?
Yes, like your stop loss would have. Yeah.
Yeah, yeah, but price did not pull back to this one. Because remember now, the engulfing is what confirmed the level. So you say any
Oh,
level the market pull back to and give me the engulfing. Once it is in proximity of the same point A, that is when me I go enter. Follow?
yeah.
Yeah, man, bro. So the engulfing confirm the entry. The engulfing confirm the level. Because watch this. If the market did pull back to that first level up and never give an engulfing pan the time frame them when me look for the engulfing pan and it pull back to the last one and give me engulfing, then me I go enter there. So the engulfing is what confirm the entry. Make sense?
Yeah.
Yeah, man, bro. So you're good now.
Yeah. Yeah.
Cool. All right. The person will text in the chat, so they have a question. You have to raise your hand so we can unmute you. All right, Tevin, go ahead.
You highlighted the question that I was going to ask because I saw multiple touch at the resistance area.
Yeah.
I was going to ask if that's what you use to confirm the trade,
Engulfing
but you
confirm it.
answered that. As Mr. Davis was saying that sometimes he doesn't see the engulfing.
Yeah.
Another thing I noticed that because I'm in the group, the ABC group, and other groups with you, when I catch the engulfing on the 3 minute, and you're not seeing any, and the 5 minute is normally formed as a pin bar candle.
Okay.
And would I use that as one confirmation too? Because you know it will show huge buying pressure, selling pressure.
Yeah, man, you're correct. You're correct, but I like to just stick to the engulfing, you know? But you are correct. You are correct because look at this. And this is a little bit deeper, or I should say, advanced. When you put this bearish candlestick in this candlestick as well, the top part I go eat off, and I go end up with something like this. So you are correct. You're gonna end up with a pin bar looking like this, where just like mathematics, you have numbers where cancel out each other. So them two candlesticks here cancel out and only leave this. So it's like a pin bar. But this is a little bit more complex and harder to understand. So I'm just say stick with the engulfing. So it's easier for your eyes and it's easier for spot. Make sense, bro? Make sense?
Yeah, makes sense.
Yeah, man. All right, cool. All right. Johnny Williams. Yeah, no, go ahead.
All right. Um, Basically the same thing that he asked. I was going to say that I see the most on the higher time frame. I will see the pin bar, but that was new to me. The pin bar is basically engulfing on higher time frame
Mm-hmm.
when you look on the smart chart. But for instance, sometimes when you send out a trade, right,
Yeah.
and the A is slightly broken, and then it formed, like maybe it stop us out probably, or maybe it didn't stop us out, but it create back that same engulfing, but at a higher level. Is it okay? Because I was trying to do that the other day, but I didn't bother take the trade. Is it okay to use that as a confirmation, even though it break the pattern of the ABC?
Bro, that's a very good question. So, and this is something that I talk about in the advanced course, but I'm gonna drop some bars here. So, firstly, most persons are trading, but them don't know how the market react with levels. The market react with levels in one of three way, and this will change how most persons view the market. This will change how most persons view the market from here on out. The market react with levels in one of three ways. The first way where most persons are looking for, but you have to understand that the market is not perfect. It will not always do what you think it will do. You have the perfect touch, which is this. The market make a perfect touch with the level we have drawn out. And at this most persons are look for, and at this them are expect every single time. This is a perfect touch. You have the gap. The market can gap the level where you have and push down. Because remember, think about like a magnet. If this level is very strong, it will repel price so much the price not have its strength to come back to this level fully before going down. So it create a gap and push price down. The third way, and this is the way where most persons get messed up on because them now made say this is possible. When the market overlap the level. So, pray again. The market react with levels in one of three ways. You have the perfect touch, you have the gap, and you have the overlap. With that being said, if you have a trade idea looking something like this, a price push down, price a pull back, then price a push down again to create the pattern. So this is A. You have point A right there, so. and then the market create point B right there, so right. So now you would have this level of resistance working with, right? Price are gonna do a pullback now. Most persons are always expecting a perfect touch before price drop. Them now meds and say, hey, price can break above, and do some sort of fake out. But really and truly, me not really call it fake out, me just call it a overlap. The price can overlap a level. So what might take place is price might do this and then come back down. So you're asking if this is still valid? Yes, it is valid. But remember, as I said before, the engulfing confirms the level. So if when the market overlap and give the engulfing up here, so in some scenarios, yes, I might take the early entry up here, which is a little bit more risky, right? I have my stop loss above, and this allow me to have a very nice risk to reward ratio, right? So this is a bit more risky, but it is still valid. The safest way is to wait until price actually falls back within the level and then give you the engulfing under here. And then most scenarios don't have to even wait for the engulfing. Once the price engulf above it and drop back inside, you can take your entry, stop loss, boom, 1 to 2. So this should answer your question, bro. Yes, it is still valid, but you have to also pay attention to it properly. And if you scroll back in the signals group, I remember taking an exact trade looking exactly like this, where the market gave us ABC, but it gave us an overlap instead of a perfect touch with the level of resistance. So I hope you understand this now, bro.
Yeah, makes sense.
Makes sense, right?
Yeah.
Yeah, man. So, guys, pay attention. Remember, the market react with levels in one of three way. Perfect touch, you have a gap, you have a overlap. Always keep these things in mind. So when you trade, you not just trade with a naive and a rookie mindset. Say, yo, I go pull back to my level perfectly. Like some persons think that them special. You aren't special. The whole way up on the market, I try if you make a difference. So you coming to think you're special, you have a sad mistake. Trust me, you have a lesson coming. You see me? You have to trade in defensive mode. You have to understand the market. And knowing the market no means that you have to study every book you see and go through every course you see. No, it just means you have to have a simple approach and master that one simple approach there. And you have to see the biggest difference in your trading. Because something as simple as this, enough persons might still not understand. Say, hey, you have perfect touch, you have gap, and you have overlap. You understand? So you always have to tell yourself, say, yo, me not special and the market now go on working in my favor. So I have to equip myself with the right skill and knowledge to navigate the market movements. That simple. Any more questions, guys? All right, bro. This is step index that I move. Good. Let me go take a quick look. Step index. Think it's this one. All right. So in an overall downtrend, clearly downtrend that. All right. So even though in an overall downtrend, the market is currently retracing. This right now is a retracement. It's pulling back to a level before coming down. I wouldn't feel safe taking a sell from here. Why? Because it have too much uptrend structure right now. You have lower high, lower high. Understand? So this at the previous lower high point, what I would want to see is the market to break above this and then pull back something like this. So that have point A right here, so point B down here, so and then point C up here, so and then price can drop. So something like this mode I want to see before me even consider a trade on this. So you have to always know how to filter out certain type of markets as well. Remember the Zachary person did have a question, but me see them rejoin every second, so I'm not sure them if them on the class right now. So raise your hand if you have any more questions. Well, yeah, guys, that's basically how we go about catching this VIX 50 cell and the previous TP as well, which was VIX 31S. Yeah, VIX 31S are the same thing. Let me see if we can find it. The 27 VIX 31S. VIX 31S. I think I caught that trade on the computer and the laptop. So it's not upon this computer. Yeah. Alright, VIX 31S, the 27. Perfect. See that? See exact trade there. Exact trade. Let me find it on the laptop right now. Boom, 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 boom. VIX 31 is yeah, perfect. Yeah, at the level right here. So that was the level. So this was the level. This was point A. This was point B. And then this was point C. So you guys see it right now? Same exact thing. And right away I realized say even the 15-minute time frame gave the engulfing entry. Bam. Stop loss could be right there. And then boom. 1 to T slap out. 1 to 2 slap out. So basically guys, it's just rinse and repeat. The main thing is just being patient and make these patterns play out and reveal themselves to you. So it's just patience, discipline, and understanding. Because if you try to rush it, you're going to enter too early and you'll get stopped out. So ABC, very, very simple. So this class is being recorded. So I'm gonna send this class as well in the group so you guys can rewatch it. I'm gonna select the winner right now for the 100 US account funding. Ensure you guys have your crypto accounts ready. I'm gonna be using Red Dot for the transfer. So I'm gonna select one lucky person right now to win this 100 US. So let me see. All right. Bam 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 bam. So this isn't even random, guys. I'm looking for a name that I see the most frequent on the classes. So the last group class, I see a few names. I see a few names that keep recurring. I see a few names. I see Unique Douglas. I have a few names that I recognize. There are a few names in the class I recognize. So let me see. All right. All right. All right. All right. All right. So we have a winner. Have a winner. Tevin Affleck. Yeah, bro. You were selected. You were selected, bro. You hear me?
Yeah, man, here.
Yeah, man. So send me a message right now on Telegram with your USDT crypto wallet so we can transfer. Alright, bro? Yeah, man. Do it right
Thanks.
now. Yeah, man. Alright, guys. So I hope you guys enjoy the class and you learn something new. So I'm gonna send this to you guys right now so you can rewatch it, understand the concept, apply proper risk management, and just take your time and trade. All right, guys. Blessings.